Ever wondered what banks actually do with your money? They don't just keep it in a vault and protect it for you, they use it to make themselves more money. Let's say you deposit $100 into a savings account and it pays you 1% interest per year. This is the rate that the bank agrees to give you as a reward for trusting them with your money. After 1 year, you'd have $101 in your account. That's a $1 profit. Not bad, right? But what if I told you that the bank made almost 10 times that amount from your money? Let me explain. Suppose another customer walks in and wants to borrow $100 from the bank. The bank lends them your money and charges them 10% interest per year. After 1 year, this customer would owe $110. That's a $10 profit for the bank, just from lending out your money. And that's not all. If the borrower doesn't spend the money and deposits it back into the bank can just lend it out to someone else and charge another 10% interest. This way, the bank can keep making money from the same $100 over and over again. As you can see, banks are not the best place to grow your money. In fact, you're losing money by keeping it in the bank. Why? Because of inflation. Inflation is the increase in prices of goods and services over time. It's caused by many factors, but one of them is the government printing more money. When there's more money in circulation, each dollar becomes worth less. If the bank is paying you 1% interest and inflation historically is 3%, you're effectively losing 2% of your purchasing power every single year. As a result, you're not getting any richer by using a bank. At the end of this video, I'll reveal the most valuable use cases of banks, but first, have you ever considered cutting out the middleman and doing exactly what the banks are doing? Investing in the stock market is not as hard or as expensive as you might think. You don't need to be rich or an expert to do it. You just need a smartphone, an app, and a dollar. There are so many apps and platforms out there that let you invest in the stock market with as little as $1. You also don't need to pick your stocks and try and guess the best ones. You can invest in hundreds or thousands of stocks covering the entire US economy or even the global economy. Historically, the average annual return of the US stock market has been around 10%, way better than the interest rate you get at a bank. So why use a bank at all? Money that's invested isn't immediately accessible. You'll have to sell whatever you've purchased and then wait for the money to be transferred to you. Banks will let you access your cash at all times, and therefore the best use case for a bank is that it's a safe place to keep 3 months worth of your living expenses in cash so that you can dip into it in case of emergency.